Hey, it's Connie from Prosperity Finance. I hope everything is well with you and your family. Now, last week, the Reserve Bank has officially removed the LVR restriction. That means the bank no longer need to comply with the LVR rule, at least for the next 12 months. Now, after announcement, we have a flood of inquiry asking, oh, LVR is gone, so can I borrow more? How much more can I borrow? Now, I thought that's a really important topic. I'd like to take this opportunity to share with you about this. Firstly, let me clarify. So at the moment, it hasn't really taken any action yet. Reserve Bank doesn't require LVR. Doesn't mean the bank doesn't have LVR rules. Now, I don't think bank will completely forgive deposits. Otherwise, there will be bad debts because bank can't recover the debt in the case that, the property has to go through mortgagee sale if they lend 100%. So it won't be completely remove LVR, but we don't know when they're going to take action. Now, I guess there's two reasons that we haven't seen any changes. Number one is under the current COVID environment, people's income are not very stable. In some cases, the income has been reduced. So bank already exposed to higher risk. So if they increase LVR, it's actually increase the risk even further. So I think the timing probably is not ready. Now, the second thing is, for any major policy changes, bank need to think about carefully how they're going to respond, and then they also need to adjust their system, policy, everything. So it's going to take time. So that's probably the other reason it hasn't happening. But we will make sure that anything that we hear, we will give you update immediately and share with you in terms of the impact. Today, I want to spend a bit of time just talk about what if LVR does relax a bit, how that's going to impact your borrow capacity, because that's the common asked question at the moment. So firstly, I want to clarify, in terms of borrowing capacity, it's actually driven by two important factors. Number one is the capacity come from your income. We call it servicing. So that means your repayment ability, how much net income you have to service the loan. So that's driven by your income. And the income can include your job income, your business income, your rental income. And if you have a boarder in your home, the boarder income also will be taken into account. And also, if you have subsidy from government, for example, family tax credit, that will be included as well. Now, obviously, the bank wants to know after tax income. And apart from living, that's the disposable income you can use to repay the loan. So that's really critical factor. Now, if you can't pass that, the bank won't give you money, even though you have low deposit, because bank has to follow a responsible lending code. So what the responsible lending code says is that you can only lend to a customer if they can demonstrate the ability to repay. So that's why the bank want to make sure you can repay, not just be safe and take your property. That's not the end game. Now, the second factor that drives your borrowing capacity is actually to do with the deposit and the LVR. So, for example, at the moment, let's say you have 200K deposit and the LVR for first home buyer is 80%. So that means bank only require 20, and in this case, you already have 200K. That means you can borrow 800K to buy $1 million home because you have 20% deposit. Now, if your deposit decrease or LVR increase or decrease, that would affect the capacity, right? So that's the LVR driven. So should bank, relax LVR, you can only borrow more if your LVR capacity at the moment is weaker. Now, by increase LVR, your LVR capacity will be increased, right? So if your LVR capacity is weaker than the servicing capacity, then LVR increase would increase your borrowing capacity. Now, on the other hand, if the servicing side, i.e. your income, is weaker than the LVR capacity, then it doesn't matter how bank relax LVR, your borrowing capacity won't change. So it's really important to understand which is weaker. If it's LVR side, yes, LVR increase will increase your capacity, otherwise it won't. So it may not sound very clear. So I just thought it would be better if I can use a case study to illustrate what I just said. And I'll use two examples. One is, the first one would be the income side is a bit weaker. And the second example is the LVR capacity is a bit weaker. So we can see the difference. So let me go to my whiteboard. Okay. Now, in this example, let's assume you want to buy $1 million home and you have 250K deposit. Now you're looking to borrow 750K, right? Now, after assessment, we find out that in terms of income per se, you can service 650K. Let's say that's the results. That's based on income. And look at the LVR capacity. So let's say we have 250K deposit, and at the moment, bank only require 20% deposit, and they're willing to lend you 80%. Okay. Now, in this case, your LVR capacity will be $1 million, right? So that means you can buy up to 1.25 mil property, and you have 20% deposit. So the LVR capacity will be 1,000K or $1 million. Now, in this case, the servicing is weaker than the LVR, so the borrowing capacity will be based on the servicing. So that's 650K, right? So even though you have, more than enough deposit, but the bank won't lend you more because you can only serve 650K. So in this case, the budget would be 250K plus 650K equals 900K. Now let's say the LVR now increased from 80% to 90%. What does that mean? So let's make a change. So that changed to 90%, and you only need 10%. So that means the LVR capacity would also increase. That would increase to 2.25 mil, right? So if you buy a property up to 2.5 mil, you already have 10% deposits, and you borrow 80%, which is 2.25 mil. So here I'm going to change that to 2250. Now, between the two numbers, your servicing is still weaker, so the borrowing capacity is still 650K. That doesn't change the borrowing capacity, therefore it doesn't change your budget. So this is an example where the income side or the servicing side is weaker than the LVR side. Therefore, by increasing LVR, it doesn't really make any changes to your borrowing capacity or budget, right? Let's look at another example. Now, in this case, you're also looking to buy $1 million home, but you only have 50K. It's really difficult to save in the current environment, right? But in this case, I also change your income level. Let's say you can afford, your income can afford 950K. Oops, sorry. So 950K is your income borrowing capacity. Now, what is the LVR set capacity? So 50K divided by 20% deposit requirements times by 80%. So that equals to 200K. That means you can buy a property up to 250k and you have the 20% deposit. And the bank will lend you 200k, which is the equivalent 80%. So in this case, the LVR capacity is 200k. Now, between the servicing and LVR capacity is weaker, so the borrowing is 200k. Now, in terms of the budget, you have 50k deposit plus 200. That's only 250k. That can't buy anything, right? So what if we change the LVR to, say, 90%, 95 for example, and you only need 5% for deposit. Now, in this case, you can borrow 950k based on the LVR because you buy $1 million house and you only need 50k, which is 5%. So that would significantly increase LVR capacity to 950k as well. So the borrowing will be the lower of the two. In this case, they are the same, so 950k. Now we can significantly increase the borrowing capacity to 950k and the budget to $1 million. As you can see in this example, if your LVR side of capacity is weaker and bank increase LVR, then it will significantly increase your borrowing capacity, therefore increase your budget. Whereas in the last example, it doesn't change. Okay, so hopefully by using these two examples that help you understand how the LVR rule, if that's changed, increase the LVR, how does it affect your borrowing capacity? So it really depends what your current situation is. Your LVR side is weaker or the servicing side of capacity is weaker. If it's LVR side, yes, LVR rule change will help you borrow more. I hope that helped you clear the minds. If you have any question, please feel free to contact us. I'm more than happy to provide a personalized solution, help you to review what are the opportunity for you going forward. Thank you so much for watching. If you like our video, please subscribe our YouTube channel. Every week we have great content to share with you. Thank you. I will see you next time. Bye-bye.